Welcome back, everybody. Happy Friday. Thanks for tuning in to Pick My Solar Live. Rex Kehoe here, alongside with Mr. Patrick Crowley. All right, let's get into it. So, what's new in renewable energy? Let's see what's kind of going on in the world today.
Can't wait to tell you, Rex. So San Diego, great solar market, high electric cost, very competitive, obviously great radiance. They're pushing a really bold climate action plan, 100% carbon-free by 2035.
It's crazy.
I think the earliest I've seen 100% initiative before was 2040.
I was going to say 2050.
I think Massachusetts is 2040. California is 2050. I might be mixing those up. But in any case, this is what we've talked about this before. We think that as some of those federal incentives start to step down, some of those more mature solar places are really going to get after it. So I wouldn't be shocked to see incentives come San Diego's way, but also they already have a really high penetration rate as is.
For sure.
So in 15 years, who knows what they'll be able to pull off.
Awesome. Big update there. $462 billion proposal for a trade-in program to bring clean cars to America. Wow.
Let's hope that proposal turns into a policy.
Yeah, that'd be huge.
That would be amazing.
And get rid of that old Camry of yours.
I love the Chariot, though. I love the Chariot.
All right, another update here. First Solar opens a 1.9 gigawatt facility in Ohio. That is pretty big.
It's enormous.
That's massive.
That's huge.
I don't know how many panels that is.
Ohio's kind of one of those sleeper states for solar. They've had incentives off and on, and it's more of a mature market than people give it credit for. So cool to see.
Absolutely. As always, ask us anything, write us a comment, give us a call, shoot us an email. We'll answer any question you have. All right, let's get into a deep dive. Number 83, what is a solar loan? It's going to be pretty confusing sometimes.
Right, yeah. I think a lot of what people look at in solar is, well, that's such a huge cost. Or if I go loan, that's an extra payment.
Right.
So really the whole goal of solar, which we want you to remember, is we want you to pay less.
Yep.
You know, there's other initiatives and there's other reasons to do it. But if you're not going to be paying less,
doesn't make sense, really.
Right.
You know, you're going to really environmental reasons, but usually it's a financial decision.
Right. So remember, the sum of your payments is hopefully less than what you're doing today.
Yep.
And if it's not, and over the course of 25 years, hopefully it's less than.
Right.
And so I mean, it's a little less compelling, but we're always looking for what we call day one savings. I'm sure we'll get into that.
Yep, we certainly will. So yeah, we're going to go over all the different types of loans today, and really kind of, you know, having these easier solar loans or loans that are specifically designed for solar has really kind of helped increase the adoption of solar, just 100%. Kind of in general.
Yeah.
All right, so got ahead of ourselves a little bit already here. We always do.
It's what we do.
Solar loans allow you to purchase a solar system and pay it off over time. So a lot of people think, oh, solar's expensive. Like you said, you got to come out of pocket, you know, tens of thousands of dollars. That is not the case. A couple of key terms here. APR, buy down rate, term length. So I think everybody's...
If you're buying solar, you own a home, you should be familiar with all of these. Unless you bought your home in cash, then you shouldn't be talking about a solar loan. Buy your solar in cash. But I don't know anyone who's buying home in cash. APR, buy down rate, term length, all of these things are variable. They interact together. At the end of the day, each of these things will manipulate your monthly payment.
Yep, absolutely. So if you guys have any questions about these terms, just shoot us a comment and we will respond to you there. So how do I qualify?
Great question.
So yes, so when you are getting a loan, just like whether you got a loan for your car or mortgage or anything like that, they're going to be checking out your financial history a little bit. What are some things they would look at?
Yeah, I mean, you're going to need to have a good credit score, right? And it doesn't even need to be that great in some instances. We see tons of solar loans that will give a loan at less desirable rates, but they'll give you a loan at a 640 credit score.
Yep.
720 is really that threshold that you're not going to get better rates if your credit's above 720.
You're at 720. That's the best.
Another thing that they'll look for is your debt to income. If your debt to income is less than 50%, in most cases you're going to be okay. Obviously, the lower the better. But if it's over 50%, we see people DQ'd for that as well. The last thing that I would say are like the big three would be any bankruptcies that have been recent. And you just think about, this is probably something that you're familiar with if you've purchased anything with a loan, getting approved for it, credit cards, anything. You need to have a solid or solid enough financial history to be able to qualify for something like that.
Yep. A couple other kind of more uncommon items. They may ask for your proof of income, but that's not always the case. But yeah, usually just those three that Patrick had mentioned there. A HELOC, so a home equity line of credit, definitely an option. If you already
Yeah.
have one, especially.
This is likely something that if you're going to go this route, you already have. A lot of customers will come to us and say, "Hey, I've got a home equity line of credit for $150,000 because I was doing a few different remodels. Can I loop that in there?" Absolutely.
Right.
It's going to be likely more beneficial to you if you already have it.
Right.
They do take a little bit of time to secure, so I wouldn't necessarily recommend doing it
just for solar.
Because we have these other options. But if you're talking about you're redoing your kitchen, you're putting in a pool, or adding an addition, whatever it may be, and you have that extra $20,000-$30,000 that you're not going to end up using, by all means, it's not a problem at all, and we would effectively treat that on our end as a cash deal,
right?
Because you're securing
You're
your
doing
own
the financing yourself.
Right.
Yep, that is correct. All right. So one of the first structures for a loan, it's called a re-amortization loan. Definitely a pretty popular one. Kind of the basics of a re-amortization loan is that your payments will start off at a certain amount, and then you can re-amortize the principal balance. You can re-amortize that loan and adjust your payments at some point throughout that length of the term loan.
And yeah, of course. So you mentioned it. Most of the loan providers we work with give you one free amortization.
Yep.
And the design of that is to allow you to claim the tax credit, put that money into the loan to lower your payment. So, Rex, why don't you talk about how that works?
Yeah, and
we have an example here as well.
Right.
Visual aids.
That is true. We went above and beyond today.
I know. Shout out Annie.
So yeah, as Patrick mentioned, so this is what we're talking about when we talk about these solar loans. They are designed for solar to take advantage and to take into account all of these tax credits that the federal government may give you, state governments may give you, utilities may give you. All depends on where you live.
Right.
Here's an example of a project and we had to block out some of the kind of sensitive information. I don't know if it's customers' details or anything like that. But
providers.
Yeah. So this is a project that is in New York. So you'll see we have a contract value. So that is at $65,908. This must be a massive system.
It's a big project.
Yeah.
In New York, this is huge.
Right. This is a big system. So these are higher numbers than you would typically see on a loan, but you're going to get the idea of how this loan works. This loan has a state rebate of $6,090. I believe that is the NYSERDA rebate.
That is correct.
And then a federal tax credit. I believe we're showing 26% here, but technically it's still 30% this year at $15,553, and then a state tax credit of $5,000, giving the net price of $39,265. So just to kind of walk through the math on this re-amortization loan, your payments are going to start off at $435 a month. And that payment is based off of the entire contract value of $65,908. So if you were to just kind of plug this into an amortization calculator, which we have an example here, these are, just Google amortization calculator. This is going to pop up, and you can kind of put in these numbers just so you can kind of see how this math works for yourself. But you can see at the top here, we've put in that contract value, which essentially is the entire loan amount, 20 years at the 4.99% rate. That's going to give you a payment of $434.60, which is what you'll see here, kind of as we round it up, $435. And then you'll see right below it that these payments from years 2 to 20, this is a 20-year term, they would be $254 per month. So massive, massive drop in these payments.
You can see right below it what we call the blended average.
Yep.
So if you take the sum of all of your loan payments over that 20 years, including that 1 year of the higher and the 19 years of the lower, you're really close to that lower payment across the term. So it's just 1 year that you're paying that higher amount in the re-amortization scenario.
Exactly. And you can see the graph above there as well. You can see at first, it dips down. I am actually paying a little bit more right now for solar. Once I recoup all those tax credits, I'm going to put that back into my loan, and now look at my savings. They're really starting to jump up there.
Right.
So so then we drop down to the 254, and then just to kind of see how that math works, if you see at the bottom here, you can see there's 12 months of payments. So it starts off at that principal balance of $65,908. That's what we started with. And then after each payment, it's going down and down. And then our balance after that first year is going to be $63,937. So that's the number now. that we would, let me back up here. So now we're going to apply the credits and everything to that balance.
So this is the re-amortization.
Yes.
This is you effectively, and we're using this 1 year as an example. Obviously, you're going to do this when you're filing for your taxes.
Could be, yeah. It's usually within 18 months.
Right, just because when you go solar, it might not line up exactly a year when you go pay your taxes. So
exactly.
You're going to do this at that time. We show a year just because that's the easiest way to get about it.
Yep.
So the re-amortization is taking that balance, putting all the tax credits.
Your federal, in this case, the federal tax credit, the state tax credit, any other rebates that may be in there, you're putting all that towards the balance.
Put it in.
And then in this case, it would drop it down to $37,294. So now that's your new balance. Obviously, that just went down significantly.
Crazy.
And you can, again, if you want to manually calculate this yourself, you can see now instead of 20 years, there's only 19 years left. The APR has not changed. That's still at $499. So if you calculate that, now my payments have dropped down all the way to $253.50.
Let me ask you something, Rex.
Sure.
Let's say I'm a homeowner, and that $430 after the first year, I think that's not so bad. I'm still saving money. Maybe not in that specific scenario, but let's say another scenario where you're like, hey, I'm still saving money. Do I have to put the tax credit back into the loan, or can I keep that cash?
That is a great question.
Well, thank you.
Yes, so depending on the financing provider, you can keep that amount. You don't have to pay it back. Obviously, if you do keep that amount, your payments are not going to re-amortize and drop to this $253. They're just going to stay the same as what they were.
So you can do as little or as much as you want. In most cases, probably some restrictions.
Yes.
Okay.
Yeah, absolutely. Again, it's going to depend on the specific provider. But yeah, typically you're not going to get penalized if you don't put it all back. It's not going to re-amortize to that lower amount there. So that is a re-amortization loan.
Well done.
Thank you very much. Pretty common. That's definitely a big one. A couple other big ones would be same as cash loans and combo loans. So we'll get into these as well.
These are basically about using that tax credit up front.
Yes.
And so I think it'll be simple to start with the same as cash loan.
Yep.
So we see the same as cash loan a lot when people want to pay cash for their system, but maybe don't want to pay the full cost of the system.
Right.
And so we saw what that net price looked like previously. So that $65,000 versus that $39,000 or whatever those numbers were.
If we pull so here's the example you're looking for.
Right.
Here.
And so basically what we would have this this customer do is they would pay that $39,000 in cash.
Yep.
And what we would do is we would take the sum of those incentives, which looks to be about $25,000, $26,000 in this case, and we put it in a same as cash loan. And that loan has a very low interest rate, and it's 18 months of a term.
Yeah.
Or to use an example.
Zero interest rate, actually.
Zero interest rate.
Right.
A small buy down fee, is that fair?
There is. Yep.
Okay. So just a slight cost to finance, maybe, but there's no interest on that. That's a great point. And the idea there is you get those rebates and incentives back, and in that 18 months, you pay that off. Again, no interest, no payments are required over those 18 months. And you've paid cash for your net price, and then you've used those incentives a year later to pay off that.
Essentially what it's doing, this financing provider, they're essentially floating you the tax credit amounts with the assumption that you're going to pay them back within 18 months. If you don't pay them back in 18 months, you are going to have to start paying interest on that. So you need to check with the provider. Some of those same as cash loans, they would have I wouldn't say penalties, but they would backdate interest, so you got
substantial interest sometimes.
Yes,
as well.
So you got to really kind of know if you're doing one of these same as cash loans that you are going to be able to take advantage of all of these incentives. So check with your tax professional, make sure you have the tax liability, and that you are going to recoup enough to pay off that same as cash loan. You don't want to have to deal with that, at the last minute and be in a bad spot.
So on the combo loans, it's effectively the same principle, except instead of paying cash for that net price, you're going to do a loan. Right. And so you're still going to be required to pay off those tax credits within the year, or else it's going to be put into the principal loan at that higher interest rate, backdated interest. But you will start off with, if you remember when we were going through the amortization calcs, you have the high payment and the low payment. The combo loan starts at the low payment and assumes you're going to pay back those tax credits to effectively cover that difference. If you don't, they will penalize you for it. And so what we talk to customers about in this scenario is, if you're sure that you're going to pay that tax credit, if you're sure you're going to have that liability, combo loan might work out because you're going
Sure.
to have a lower payment day one.
Yep.
If you're not sure, or you don't know what you want to do with that tax credit, or you might not be able to claim it all in 1 year, maybe a re-amortization loan's best.
For sure.
Because you're
Yep.
not going to get hit with penalties. That payment you're paying day one is the highest ever you will ever pay for that solar loan.
Yep, absolutely. Well said. So, how does the ITC and other incentives factor into the loans? I think we've kind of covered that.
Yeah, we sure have.
We tend
There's
to
many
do that.
ways to do it, though. That
Yeah.
is I think that's the important thing. If somebody's telling you this is how you have to do it,
Right.
you can have some flexibility with that.
Yep. So we got ahead of that one. That's it. So, I mean, obviously, it's kind of a lot of material we just threw at you. But those are the basics. Those are kind of the three most popular structures for a loan, at least for solar loans. If you have any questions, like I said, put a comments in there. We'll be sure to answer it. Give us a call. It can be a little bit overwhelming. It's really not. You just got to have somebody that kind of can walk you through it and explain it.
Yeah, that's it. And remember, your loan, the goal is to get below what you're paying to your utility, right? And there's no upfront costs. All of these things are zeroed down as well.
Yep.
You know, unless you want to do the same as cash, but that's the goal.
That
And
is
so
it.
from now until the end of the year, remember, refer your friends to
Yes.
PickMySolar. Each of you will receive $599.
That's
should,
huge.
Should you go solar. And we provide competing solar solutions from top providers in your area and their loan options.
There you go. Well
To bring it
said.
on home.
All right, everyone. Have a great weekend.